Hey, welcome to the Closing Beat, everybody. Happy Wednesday to you already. Wednesday already. We are financial advisors here at Jazz Wealth, and we're happy to help teach. Got a lot to actually teach here today, but if you're going to be in Texas tomorrow, Friday, Saturday, Denton, we got a button, right? Yeah, if you're going to be anywhere near these spots, come on by. Come say hi. We'll be there hanging out before the drum corps shows, and some after the drum corps shows. But you're welcome to stop by. We've got an incredible amount of people already that said, I'm there. I'll be there. Surprisingly, in Denton as well. I wouldn't have thought that would have been that poppin' of a town, but we'll see you there. Anyways, we're going to talk about the stock markets here today. Before I do, Wine and Wealth tomorrow will be with Eric because we'll be out of town. So, and by the way, real quick, if you're a client and you come to Wine and Wealth, and you want to know some things like way out of the box, man. Like he's going to go way out in left field for things that are happening to him, questions that we've got, like really tricky stuff where it's like, can you do that and get away with it? So he's going to go over those tomorrow and try to expand your brain a little bit to thinking about things that you can do to make more money. Anyways, stock market today was not up. Well, that's a shocker. It wasn't up for a change. Well, the Biden administration came out and said, hey, we're considering some tougher restrictions on China. Then Trump said some things as well. It appears that they both kind of agree on China there. But that hits the Magnificent Seven stocks and the semiconductors at the worst possible time there. ASML was one that was actually hit the worst. I'm going to try something new. Oh, that's really small. Let's not do that. Let's just play around with that. ASML was the worst performer, and that's because they are the sole producer. I have no idea what to do. Oh, here we go. I'll just do it like this. Look at on the fly. A little bit more. And maybe that's all you're going to get today. So they are the sole producer of the equipment that makes these nano chips. And well, wouldn't you know it, they have some clients over there in the old, oh, that doesn't work either. They have clients over in China. And so they were hit the worst. If you take a look, I'll just bounce over to the chart here. ASML, there you go. Well, that's not pretty. They also happen to report earnings at the same time, so a double whammy for them if you happen to own the stock. Hey, maybe you're looking for a pullback or something there. Now, the rest of the market, if you look at the S&P here, okay, so we pulled back. Well, a lot of things fell today, but if you look at the heat map, and this may not look the greatest again, but oh boy. Yeah, good enough. We'll put it over here. Just look at the red, right? If the biggest names, remember, the bigger the square, the more impact it has on the market. So it's just a real simple heat map. I used FinViz for this, just real simple to look at. The bigger the square, the more impact it has. The more red the square, the more down the stock was. Well, the bigger squares are solid red today, right? So we know that the Magnificent Seven has already been pretty, been a little overbought. We've been talking about that all week. So if we have, that's why I said it's the worst possible timing. We have an incredibly overbought grouping of stocks that have a really large impact on the stock market. And then we have political commentary that says hey, we're going to be tougher on the very stocks that depend on said chips, right? Manufacturers, etc. So not really, really good. We talked about that early this week. What happens if the Magnificent Seven doesn't participate? They didn't participate today, which may be a good thing. Maybe you're excited about that. You want to see them pull back. You want to buy stock. So maybe this is the beginning of that. We will find out, of course. If we move on and look at the old Dow, pop on over here. Good day for the Dow again. Nice little tear there. It's very extended, but not more extended than the Russell 2000. We talked about this. The Russell 2000 yesterday closed in the most overbought condition it has ever been in. Not like, oh, the most overbought in the last 2 months or whatever, ever, since the 70s, right, when this thing first came out. So let's take a look. If you look at the slide over here, 4.42 standard deviations away from its 50-day moving average. That is officially a record. You've never seen that before. Remember what we talked about yesterday and the day before? All right. So I'd like to point out that that extension in the Russell is not only the greatest extension ever in the history of the Russell, it is in fact more extended than any index has ever been, ever. The Dow, the Nasdaq, the S&P, right? It's never happened. So remember, go back to that. Hey, what if the price of a car is the most extended it's ever been? What happened during COVID, right? Prices of everything went up. People eventually said, you're crazy. I'm not doing it. What happened? Prices come down. Well, if we look at the Russell 2000, it was just a good day for everything to kind of take a break, so I won't blame it all on that. But that's what happens. Things take a break, right? They go up, they go down. Once again, the point of me doing this show, the point of being a financial advisor is, of course, to add value in the growth of your investments, but also to add value in the limiting of you losing on your investments, right? So I can keep you away from this stuff. It's really why I'm trying to point this kind of stuff out. Also, here's a fun fact. We're getting a little geeky. Stay with me. The Russell 2000 as a whole has a value, market cap, of about $3 trillion. Okay. That is less than Microsoft, Apple, Nvidia prior to today, right? So if there were just a 3% profit-taking move, which we saw the heat map earlier, if just 3% of the money came out of those stocks, that would be enough for a 10% rally in the Russell 2000. That's how big those three stocks are. That's just those three as well. So did that just happen? Do we think that just happened? A little profit taking from those, very small pullback. Where'd the money go? Well, obviously it went to the Russell 2000, 10%. That's exactly what happened. So pretty cool. Anyways, oh, I got to show one more thing. The Fed pricing. You guys know about this? You can look at the odds of all of this. Fed pricing now says, yeah, the rate cut is going to be in September. There is a 90% chance that it will not happen in July. I think it's gone higher today. And then there is a 90% chance here that it will happen in September. So everybody's looking towards that. And that's why I say, like, if the Russell 2000 pulls back a little bit, it's probably not the end of the world there. So just a heads up there, and I hope you learn something from all of that. It's a good week so far for lessons ahead of time that then happened, and we could kind of learn from it in real time instead of, I told you so. Yeah, I don't like that. Anyways, also I looked at the retail sales last night. Good, right? We could have talked about it yesterday, but one thing is really obvious there. The upper end of income earners are still spending on name brand items, which is what we saw, right? Oh my God, we're still out there shopping. The lower income earners have now spent through all of their COVID savings, and they're still spending, but they're using credit cards. So there's this widening gap there, which probably bodes well for some comments around political season if you want to get fired up about that stuff. All right, some stocks in the news, and I'll take your questions. Five Below, they're losing their CEO here, and they guided lower. They're having a hard time selling things for less than $5, which, do you think that would affect the dollar store as well? Anyways, they keep lowering their outlook there, and that is not good for them. Johnson & Johnson, really the focus here today is earnings related, right? Mostly a beat, but they were expecting to see a cut of about 68 cents, and that only came in at 62.5 cents or something like that. So that was really good news because you know how big they are, right? So a savings of a few cents turns into hundreds of millions of dollars. So good news there. Not so good news, Spirit Airlines. None of that is good news. It doesn't look good, right? Spirit Airlines says, we're still selling tickets, but every other thing that we make revenue from, we are seeing less transactions. You know, the bag fee and use the bathroom fee and all that stuff. So they're seeing less transactions there, and that's going to translate into, well, they think it's going to translate into some weaker earnings going forward, which they can't afford. They're going to lose $500 million this year. Like, lose it. It's just gone. JB Hunt. I always find this one a fascinating one because this is one of the bigger transport stocks, you know, in the country. And we have some issues here. So you could learn a little bit about them by looking at what's called the Purchasing Managers Index, the PMI, right? If you want to take a look at that. And what it does basically is it indicates the level of manufacturing, which then would need transportation to get to the end user. It indicates that in the whole United States. And if you look at it, it's kind of like a weird chart. Anything under 50 is considered a shrinking manufacturing light world, you know, like the economy, the manufacturing portion of the economy is actually shrinking, not growing. And anything over 50 says, hey, we're growing. More stuff's being made, which means more stuff would be transported. Well, the analysts like to look at this because it's a leading indicator for earnings for these types of stocks. Anyways, the Purchasing Managers Index, you know, it's shrinking. So these guys have less stuff to deliver. They're not delivering for Amazon. They're delivering the big piece of equipment that goes to the guy that's then going to print stuff on it or do whatever they do. Anyways, because of that, JB Hunt overall operating profits down 7 quarters in a row. And that explains a little bit about what you see on the chart if you're looking at the chart. All right, I'll take your questions if you have any. And then coming up tomorrow, we won't be here, by the way, right? Going to Texas, you know that. You got Alaska Airlines, Boston Scientific, Crocs is still a thing, okay. You've got Dr. Horton reporting, Domino's Pizza if you're into that stuff, Textron, which will be at Oshkosh, and then Netflix will be the main attention grabber, right? So after hours tomorrow, Netflix reports, and the Nasdaq goes all kinds of wild and stuff, and that's that. By the way, while I'm waiting for the stream to catch up, take your questions. Have you seen a Netflix conference call? Did they update their camera to a little bit better quality nowadays? Swamp Rat's here. How you doing, man? Good to see you. Is Carmax overvalued, or will the stock go higher? I can't do that. But yeah, I can't really say that. But where did it go? It's not coming up at all. I can't get it to come up at all, actually. Really? Well, for whatever reason, it's not in the list there anymore. Carvana just reported as well. That one comes up. Come on, man. Refresh. Oh, here we go. It's coming. There you go. Sorry about that. Okay, Carmax here. So ask yourself, how often does Carmax like to remain as extended as it is? Well, let's just go back and look. Extended. Well, okay, it did go a little higher. Falls. Extended comes back and falls. Extended to the downside. Bounces. Carmax doesn't like to do that. It's very much a trade around the rubber band of the 50-day moving average. I'm not saying it's easy to predict or anything, but that's where it likes to go. So if you, in the short term, own the stock, what happened? It did something that it normally does, but it went a little too far. You probably see people want to take some profits there. Right? Anytime you own an asset and it goes up in value faster than it was supposed to, what are you waiting for? Right? My house, I just sold my house. It went up in value over 150%. I was only there 4 years. Okay, somebody else can pay for that. Yeah, same thing with stocks. Yeah. How much of a dip are you expecting for the tech sector, I think is what you're saying there. How much of a dip would you be expecting? Well, today wasn't pretty for the tech sector, if you're going to look at that individually there. A normal range for a pullback after being extended is back to what the average is. So think about it this way. The glass, we were all perceiving the glass to be more than half full. Well, we only want it to be half full. So what happens? People bring it back to being half full. Prices tend to navigate around the average, right? So whether it's a short term or long term. If you're buying a car, a house, whatever you're doing, prices like to hover around the averages. It's a normal human instinct. If prices are below the average, we perceive that to be a discount, and you'll find more buyers than sellers. But right now, we just moving our way back to the average. That's a less fancy way of saying that, but there you go. Tom says the healthcare sector usually goes down during election cycles. Yeah, how about that last one there with Bernie Sanders, Elizabeth Warren? Heyday for the healthcare sector. Do you expect a reversal on, oh, I see what you're saying. Okay, so if you look at the healthcare sector there, if you ever look back around election cycles, after you get through the national conventions, depending on what's happening there, that's where the action, or that's where the volatility tends to start. Right now, the response here is all earnings based from United Healthcare. It's a great example from yesterday. And so that's helping kind of do this in the short term. You're going to, historically, you're going to want to expect volatility as we get into the thickness of election season. So there you go. Why is Columbia Bank going up? They were, hold on. Was it yesterday? Hold on just a second. No, I'm thinking of Columbia Financial, I believe. Not here. They have earned, I don't know. That's not the one I was thinking of. Columbia Financial, that's an ADR anyways. That was from overnight, yesterday. So I don't know. I haven't researched that one. Sorry about that. What do you think about holding Alibaba? You like your Alibaba, do you? I like what they're doing with the AI stuff, and they're clearly willing to spend the money on it there. The trouble I have with, or you can't see it. The trouble I have with Alibaba is how am I supposed to believe that now is a good time to hold it? I almost would rather say I'm interested in weakness, you know, like if the whole market pulled back, if the Chinese onshore market all starts pulling back, I'm almost interested in saying, well, I would buy it just because it's cheaper. I like that $70 area if by chance you could get it. But if you bought it now, you're hoping for this sort of higher low, and then what? Just an uptrend that goes on forever? What would be the catalyst for that? What is going on with them that would cause people to say, yeah, I'm gonna put some money there? So I'm not opposed to the stock. I'm just opposed to the current price of, like, why would I start the position there? Give me something. And I don't have anything. All right. Anyways, like I said, those of you that be in Texas over the next couple days, looking forward to seeing you. My email has been going crazy with people that are wanting to meet. Assuming that some small percentage of them actually come, it'll be a good time, right? So we'll see you there. And if we're at the drum corps shows in Denton, San Antonio, or Houston, we'll see you there as well. We'll be walking around with our jerseys on, so you can't miss us. And we will see you when we get back.